What's going on, guys? Bexio back, and today we're going to be talking about Bitcoin because it is on fire and not in the good way, crashing, burning, making everyone very fearful and afraid. But is anything really wrong with it? So there's a lot of technicals going on, a lot of chart reading, things like that. But behind the scenes, fundamentally, everything that's the backbone of Bitcoin and stuff is actually doing pretty good, which is the discorrelation here, meaning is Bitcoin really on sale right now? But before we get into that, you can make your way to the subscribe button and give it a little smash and make sure that you hit subscribe because we're on the road to 1,000 subscribers. But talking about technicals, let's look at Bitcoin in a technical sense on the chart. So we see Bitcoin $38,000, under 40K, a lot of weakness in the entire market. It's not just Bitcoin. I mean, we can see this left side here. There's one thing that's green and it's GameStop. So that should tell you all we need to know about the market is just everything is in a very, very bad spot. The Fed scaring everyone with interest rates, with tapering, accelerated tapering, selling off their assets, not providing liquidity as much right now, which is what we see, like these massive moves down when there's less liquidity, less buyers, and the sellers start to dump these prices very fast when the liquidity is not there. So that's the overall market. If we look at kind of the just Bitcoin here, and we look at what we've been looking at before, this section compared to this previous section where we have this massive down, kind of consolidate to a bump up, and then it cuts right back down. We have that kind of same thing here. Massive move down, consolidating for a bit, bounces, and then cuts down yet again, consolidating a bit, and we have another drop here. So didn't consolidate quite as much, and wasn't like consolidating into this fall down, which was more of a few periods of days and then bouncing up. So a little bit different, but still looking kind of the same. So doesn't mean something's going to happen, but if we look at this compared to the other one with this, once it bottomed out here and reached down, went back down to lower levels like 28K, 38K, were literally $10,000 apart. And then it started rallying and getting up here. And then obviously this part, but rallied ultimately to a new all-time high. So are we going to see that here where we kind of get close to this $37,000 line here? And once we get close to here, are we going to see this start to kind of recover, try and get back out, probably get up to 50K, have a little bit of trouble, and then go to new all-time high? That would be like a repeat of what we've seen the last time here. Will we see it? Who knows? The past doesn't predict the future, but it's looking very similar. So probably a lot of consolidating here, a lot of accumulation. We didn't see in the beginning of this year what we wanted to see. The institutions come back into Bitcoin. So at the end of the year, it was explanatory with this kind of securing profits or even securing losses for tax loss harvesting, doing this kind of stuff with Bitcoin. And institutions were going to come back with risk on mentality in this new year. That didn't happen. The Fed completely got rid of that. They completely came out, said interest rate hikes, we're doing them, we're going to do them faster than we've done them before. Tapering, we're accelerating it, going to do it faster than we did before, and we're going to start dumping the assets on the balance sheet, which is something like $9 trillion or $8 trillion or something. So it's some ridiculous number for the Fed has that they're going to start dumping and getting rid of. So add all this together, we have take your risk on assets, get out of them, and get on to risk off assets, which would be things like Apple, you know, the most valuable company in the world, or bonds. Like the extreme risk off is bonds, and that might be where people are going, which doesn't make much sense because that's still going to be negative yielding. So if you want to lose money, I guess go ahead and do that. But every single company, even we can look here, Apple down 1.28%. It's down in a downward trend here. We look at Microsoft, hit 349, it's 296, downward trend here. So everyone is affected by what the Fed is saying. I know a lot of people want to point to Bitcoin and say it shouldn't do that, it shouldn't be correlated, but it's human nature and psychology that when something bad's happening, we want to go and be safe. So the majority of people want to get into cash, they want to get into bonds. Bitcoin hasn't been proven enough to go into Bitcoin. I mean, even looking at gold, gold's not performing well for a risk off asset. So nothing is really safe. And we can see here the correlation between the Nasdaq and Bitcoin from Will Clemente here. Orange is Bitcoin, blue is the Nasdaq, and we see pretty really correlated here. We start to get Bitcoin lifting off and going up. The Nasdaq still kind of trending up, so makes sense that Bitcoin would go up faster than the Nasdaq goes up. And then we saw the Nasdaq dump. We thought maybe Bitcoin isn't going to dump, maybe it can decouple, and then ultimately it didn't do that. It actually completely dumped with the Nasdaq and falling with it, which makes sense because the Nasdaq is risk on stuff. It's tech, software, it's things that are valued on future potential most of the time, so it's a lot more risk. Bitcoin still risk on at this point. So going in, it's going to be correlated to the Nasdaq at least a little bit, and at least for periods of time, even though over a long period of time, it's not very correlated at all. And even the fundamentals of Bitcoin, things that really matter, that take over long term, this right here, we're seeing short-term moves. We're seeing technicals move the market. We're seeing fear move the market, outside factors. But over a long period of time, if you have a great company that has great growth, great revenue, is doing everything right, it can get beat down in the short term, but then the long term fundamentals take over, they go up. So same thing with Bitcoin here as a network. Short term, these TAs are taking over, this leverage, this shorting, the news cycle, all of it kind of affecting short term things. But nothing changed fundamentally. And if we can see here, actually, this hash rate is reaching new all-time high after all-time high after all-time high. It's at another one right now. 198 million terahashes per second on the network. So it's just continuing to reach new all-time highs. This is good. It shows that there's still people joining the network, mining, securing the network, and it's still growing. So this is fundamentals. This is something you look at to take over long term, something where if this is going to new all-time highs and the price is plummeting, that's a divergence. That might mean that Bitcoin's being severely oversold, just like probably the majority of the stock market right now. And the short term might hurt, but a longer term time horizon is going to benefit you because it is still growing as a network. And we can still look at the wallet address growth, which is still just up and to the right. It's a solid stream, just growing constantly. And this also shows that people are joining the network. More wallets are coming on, more people coming on. And when you have that, it shows that there's still growth going on in the network, which is good. That's fundamentals of Bitcoin. That's something that will take over long term. When there's more and more people coming, that's a good thing. So if we saw this kind of go up and then start turning down, that would be more of a problem. We have to see, why is it happening, and is it going to be something that continues long term, and is it going to become a problem? And we have giant companies coming into the Bitcoin market and the Bitcoin mining market. We have Intel here. They've released a chip or an ASIC miner for Bitcoin to mine Bitcoin to be more energy efficient, I think they're trying to do. And they came out saying the mining market could grow by $2.8 billion in just 3 years. So I don't know what the market for mining is right now, but $2.8 billion in growth, that's a good amount of money for just 3 years. It's almost $1 billion a year. So that's just continued growth, still more fundamentals out there, and just giant companies coming in is good signs to see they see the value in this too. So short-term things shouldn't be what you focus on. And we have another giant company that is getting involved in Bitcoin, and that is Google. They came out and they said they're considering letting users store Bitcoin and crypto in digital cards. So what was that actually mean? I don't really know. I would assume it's something like gift cards or something on like a Google Cloud where you could have a card and just have it storing Bitcoin. So maybe something where you could use it to pay with Bitcoin eventually. Maybe that's what they're trying to get to down the road. We also see they made partnerships with Coinbase and BitPay to enable new functionality. So they're getting into this Bitcoin space, and that's a good sign as well. That's still growth happening. Google, one of the biggest companies in the world, is interested in Bitcoin, getting in on it. Intel, one of the biggest chip manufacturers in the world, getting in on Bitcoin, making their own miners to mine Bitcoin. It's just everyone's kind of getting into the space, and it is good for Bitcoin. There's growth happening both on the network level with the hash rate, with the wallets, and then outside of even the network with things like Intel and Google, and we seeing more companies as well add Bitcoin to their balance sheet. We know we've seen El Salvador. Now we have Argentina. Strike just went in there. Jack Mallers went in there and kind of talked them, got them into it. They are in stage where they have the Lightning Network and the Strike app in Argentina being the #1 downloaded app when it got there. So just this Bitcoin adoption is still happening. Fundamentals are still growing. This short-term pain in price is kind of a divergence from the fundamentals that are going on, and shows maybe that's a good buying opportunity now, where if we look at even this chart, we can see going to Bitcoin, you can see, and we dropped even more, but we can see the RSI is lower than it was during this other crash to 28, 29K. So this extreme fear and uncertainty and scared of what's going to happen is being priced in, is getting priced in, and kind of showing that it might be overselling Bitcoin. So we'll see what happens. Time will tell, but fundamentally, there's no problem. So this is the short-term pain. This is what happens with markets, and when the Fed's raising interest rates, doing all this kind of stuff, things that are outside of Bitcoin's control, that's going to just take over people's psychology in the market. That's going to do it for this video. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.